Clouds formed by Washington hung over Wall Street. Stocks stumbled following President Trump's order Friday to tighten immigration from 7 Middle Eastern countries with Muslim-majority populations. The move caused confusion, legal challenges, criticism, and according to some analysts, it increased uncertainty in the market. Today, the Dow Jones Industrial Average fell 122 points to 19,971. The Nasdaq was off 47, and the S&P 500 dropped 13. The lousy start to the week follows the Dow's historic topping of 20,000 just a few days ago. The rally since the election was sparked by the expectation that pro-growth policies like tax cuts would be enacted fairly quickly. But as Bob Pisani reports, there's growing concern among investors that Washington's focus is shifting.
From Trump bump to Trump slump, the markets may have blown past records last week, but stocks took a big hit today as investors digested key headlines and policy plans coming out of the new Trump administration. The problem today is investors are seeing President Trump straying from the themes that initially lifted stocks to new highs. What moves the markets forward? Well, that's simple. It's the reflation theme. It's tax cuts and infrastructure spending. What stalls the market out is any lack of news on these stimulus measures, and when the administration focuses on more complicated issues like immigration policy and trade tensions and even Obamacare. And when there's talk about changing the H-1B visa program, a visa that's very near and dear to the tech community, as we're hearing this week, you can see an immediate snapback. Big tech and software names were all down because this may directly threaten the ability to bring in talent no matter where it is. There's also a growing worry that the tax cut issue is more complicated than it seems. The market wants a very clean across-the-board reduction in taxes, period. But it's being muddled by things like border adjustability taxes and caps on deductions. Beyond foreign policy fears, traders are more focused on the Fed meeting on Wednesday and the jobs report on Friday. The Fed has a very delicate task at hand. They have to try to strike the perfect tone of economic bullishness without sending overly hawkish signals that could hint at their raising rates more rapidly than the market anticipates later this year. After all, Fed Chair Janet Yellen still needs more clarity on Mr. Trump's policies as well. The bottom line, it's going to be a very messy first 100 days. Earnings are slowly improving, but with so much policy uncertainty, CEOs have been reluctant to boast about 2017 earnings boosts from the Trump agenda, at least so far. For Nightly Business Report, I'm Bob Pisani at the New York Stock Exchange.